Alphabet Inc. Class C shares are trading at 142.17 and are up almost 40% in this past year alone. Analysts project the 1-year price to be as high as 175, as low as 150, with the average price target being 163.75. Their current share prices here, I have their current PE ratio of 24.5, which is based off of their trailing 12-month EPS of 581. Analysts project their forward 1-year EPS to be 677, so I've carried that over here. And if we multiply that 677 by their current PE ratio, we would get a stock price of 165.66, which is a 17% upside from where we are today. The industry average PE ratio is actually almost double that at 44.9. That sort of valuation would give us a stock price of 304.24, which is 114% higher. The competitor average, Alibaba, Microsoft, and Meta, all average out to be 39.1. That sort of multiplication would give us 264.86, which is an 86% upside. The S&P 500's PE ratio is very similar to Google's current, and that would be 157.54, which is an 11% upside. And the Savvy Analyst best guess, as usual, is somewhere between the industry average, competitor average, and the current. And so I put 25, and that would give us a stock price of 169.25, which is a 19% increase. Now, Google has great revenue growth and net income growth over the last few years. Great EPS growth. I mean, fantastic. Their debt to equity is 4.5%, which is very, very good. And assets have continually grown alongside the liabilities with the appropriate amount of debt to asset ratios just to fuel expansion a little bit further. And Google has been continuously beating earnings expectations in the last 4 quarters by an average of 6.5% across the board. So fantastic numbers there. And because of this, I think we can expect to see great things from Alphabet even after a recent 40% return.